There's no way to deny it. Certain sectors have yet to come back from their pre-financial crisis peak. In fact, very few indicators have shown resilience. This particular index just took a turn for the worse. You came here for the truth. Let's get into it right away. The Dow Jones Transportation Index has begun to underperform, and they are highlighting these 3 points here, and you can see this for yourself. There is a correlation between the Dow Jones Transportation Average and the S&P 500 index. Will we see a decline? Well, only time will tell. I like to link this to other indicators that to me are much better indicators of the economy than the stock market. So let's cover one right now, and that is the Baltic Dry Index. Depends on where you want to start calculating it from, but many people will point out that things are just fine because over the last year, the Baltic Dry Index has increased, and that is a fact. When you want to take it from that very, very low point, its lowest point in 2016, you will see that. That's fine. But let's just take it even from a couple years ago. It has declined. Let's take it from 2010 when they said that the recession was over, everything is just fine. Okay, even a worse decline. Let's take it from the peak, an even worse decline. It's all up to you. All I know is that this is a primary indicator of the health of the economy, and that doesn't look good at all. No matter where you take it from, it really doesn't look good. This connects in with this. Dry ships. This is seen to be another primary indicator as well. A similar one to look at. Recently they've been under fire, but it doesn't matter. What I look at is the fact that just the same. Look at where it had gone in 2008 and compare it to where it is now. It's basically non-existent. Now, we don't want to focus too heavily on one indicator or another, but just look at this as an example, as one example of many, many examples of companies and industries, sectors that just one day they're popular, one day they're doing well, and the next day they are basically forgotten. That's just what I wanted to get to. Let's look at this here. There have been some bubbles in history. And this chart here, I believe this was out of Bloomberg. Yes, that's correct. Out of Bloomberg, they're calling the Bitcoin bubble. That's up to you to decide if it is a bubble. And it has surpassed everything. Technology since 94. Technology since 94, Bitcoin since 2015, home builders since 2000, biotech since 2009. And look at this astronomical rise in Bitcoin. It has been one hell of a chart. And when you look at some of the other cryptocurrencies, it looks even more intense. It would be just a straight line upward. There is no curve. It's interesting to see it, to map it out like this. I mean, I'm not giving my opinion either way. It's all up to you. I know there are a lot of people who are much in favor of cryptocurrencies here on this channel, and there are others who hate them. And whatever side you're on, all I'm showing you is the information. That's what I do on this channel. That's a lot different than other channels, where they basically take a piece of information and then tell you what to do with that. Whereas I'm basically just saying, here's all the information. You draw the inferences you want. Let's just move on. Profit and valuations. This is quite interesting because you can see that throughout the years, there is a difference in between the stock market itself and the actual corporate profits. Look at the corporate profits after tax compared to the, well, you can see the dotted line equities. And it shows you that there is not necessarily a correlation, that's for sure, because there are periods of time when things do change. I believe at this time that the equities have gone far beyond the profits, and that is one of the signs that we have a major disaster waiting for us. And if stocks go even higher, the disaster gets worse. The higher it goes, without everything coming up with it. Look, stocks can hit new highs, but that would mean that the GDP has to be much, much, much higher, and that the debt would probably need to be a little lower. That's something else. But other things have to come up as well. You can't just have one indicator going up all by itself. That's when you start to hit that bubble territory. That's when you start to see the money get spread into other areas. Now, here we go. This is what I wanted to talk about. Correlation concern. The last bear market started when extreme low correlations turned. According to Citi, the S&P sector correlations inverted and the S&P 500. And these instances here just so happens to result in the dot-com boom and bust, the financial crisis. And is this the financial crisis part 2? Well, we'll see. It's a little early to tell that, but Citi believes that this could be a very big problem that lies ahead, according to this indicator. Again, just one of many. Never look at one indicator and believe that that is the truth. You need to look at them all. Always take a look at as many indicators as you possibly can, as many times as you possibly can. Constantly follow them. I try to bring them to you here regularly so that you're keeping up to date with them. But if I'm not covering a particular indicator, you need to keep on top of that for yourself. Risk off flows. Investors have been pulling money from US equities and high yield debt. You can see this here, high yield bonds, US equities in the negative territory, whereas gold has been up a little bit, and government bonds, can you believe it, have been up. Now, this is people seeking, by the way, that's the last 3 weeks. This is individuals seeking more security, more safety. So they're going this route here. And I covered it also with the Rothschilds, seem to be ahead of the game with that. All I wanted to note is that whenever there's a bit of turmoil, you end up seeing these so-called safe haven assets rising. But in short order, things seem to turn around. And that is the algorithms that come to pick up the pieces. That's the way they do it. They are the plunge protection team. They help this market from dropping. There are many analysts who are very good at the technical indicators, and they show you that as soon as there's a little dip in a particular asset, they buy it right back up. So you'll see the dip come down, and you'll see that buy occurring right immediately after. And that's not a natural event. That is, in fact, the algorithms trading on those dips and making sure that things end the day well. So that's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found this video informative, I know you'll find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. The links are in the description below. You can take a look at my first book, The Money GPS, where I have the Money GPS formula. And basically, I talk about the 4 asset classes and how to profit from them. My new book has the Money GPS strategy, and that is more along the lines of becoming self-sufficient, reducing your monthly expenses, solar panels, and that sort of thing. So you can check that out. Links are below. Take care.